Well, hello there, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective, and that means each time we're looking at these charts, asking ourselves, where's the supply, where's the demand, what's significant, what does these charts tell us? That's neoclassical in a nutshell. As far as what happened today, let's take a look at the numbers. We went down the last 2 days. Today we got a bounce back the other way. Who led it? It was the strongest ones, the NDX. Pushing us up 1%, NASDAQ right behind. S&P did tack on over a half. Lagging was the Russell. That's due to oil. What was causing all the pressure? It was over in Europe land, right? It was the German DAX. It was the financial sector. It was the Deutsche Bank. And the issue is there a Lehman moment? And I wrote subscribers about it this morning, told them I didn't think so, and I gave them the reasons why I thought that. I'm not going to go through all of that here, but we had that pressuring us, right, the banking sector in Europe, and we also had oil pressuring us on the OPEC meeting that's underway. Gold, silver, they both sell off as well, and we had a little sloppy action in Asia again, which is nothing new. The issue was DAX. What was happening with the DAX? Were we going to see some sort of a push to the downside, a give up, if you will? And what we did, if you look closely here at what happened, if you look at this low, that's where all the volume is. What do we do today? We come right into that low exactly, right? Get into it. The price point there is 262.19. We trade to 265. So we get within, 3 points of it? And as we get there, what happens? Volume dissipates comparatively. Flip it around. Does it mean we're out of the water? No, not yet. You're really not out of the water until you get some new highs. But they certainly have saved the show again. What I expect them to do tomorrow is try to get it back up inside this range. That's where most of the trading has been. They've tried to break it down now twice. Unable to. Tried to break it out earlier twice. Unable to. Let's see if they get back inside the range and see where that leads us. If we look at the Swiss market, which to me has been the best tell for quite a while in the European theater, they trade down to a swing point low, almost to that same low that we were just looking at, 8114 over here on the SMI. Got as low as 81120, hammer reversal back the other way. Swiss market does look like it wants to trade higher. I suspect we're going to see that elsewhere as a result. Nikkei had the big move down yesterday, gets a reversal back over. That actually helps that picture quite a bit. If we go to our markets and we look at the S&P 500, what we're going to see there is continued pressure as a result of what was happening and is still happening in the European theater with the banking sector. But you know what? They gave them a bullish engulfing today. And so what I mean by that is you get over yesterday's candle, right, the body of it, you engulf it, and you take it right back the other way. You close over the top of it. Volume is expanding. And note also here that you came back into this big bars volume low, right? That's the one the DAX was messing with, the Swiss market was messing with. They got into it yesterday, stayed right at it. Today you got underneath it. Sellers disappear. Significant area, back the other way. Folks, this thing wants to go higher, still wants to go higher, has been wanting to go higher for a long time. That hasn't changed. If we look elsewhere, let's go to the sector that has the juice. That's the NDX. NDX bullish engulfing back towards the highs, holds that bullish retest regen, important to note. NASDAQ composite, if we go to it and we take a look at it, what do we have there? Same thing. Now it had just barely gotten under this swing point high and was testing that one yesterday, bullish engulfing back the other way here as well. Finally, if we go to the Russell sucking air due to oil market, right? Because anytime the oil market's down, that's putting pressure on regional banks making a large percentage of the Russell. It does, however, get back underneath and over. Doesn't get into these big bars. So in a way, you could say, hey, the Russell is actually, even though it had a lower return today percentage-wise, it actually has acted stronger in terms of where those lower bars were. It didn't even get down to them to test. If you want to know where you should be, you know, days like today give you a good idea of what's going on and gives you a good way to measure, you know, where you should or shouldn't be in the market. And if we look at the major sectors here, you know, I'll show you what I'm talking about, and I'm just going to I'll just start here at the back end of this. I'll start with the XLY. You know, if we look at the XLY, you know, you can ask yourself, okay, is this a strong sector? Well, you know, they've been having a lot of pressure, right? You've had a lot of pressure up here, back down, big push down. Hasn't acted nearly as strong as it has been. It's been one of the stronger sectors. But what does it do today, right? It does that bullish engulfing, right? And if you're seeing bullish engulfings today, right, that's a good sign. Now, it doesn't mean this is the strongest sector, but it says that on a day where the general markets pushed higher, had bullish engulfings, you got it here also. Now, you can look at other places and you're not going to see those. For example, XLE was under pressure all day long, did get a little hammer reversal, but it didn't get over anything. It did try to test into the high of the low, didn't quite get there. Does need, well, maybe you could say it hammered back over this big bar, high volume bar. So the key thing here, you know, I like the way this actually looked. The key thing here is you traded into this, couldn't stay into it, push back the other way. Volume disappears. In other words, sellers unwilling to sell at lower and lower prices. There's other places, of course, that you still see good strength. For example, technology, right? That's no surprise. There's places that you probably don't want to be. Look at the real estate market today. You actually do a bearish engulfing instead of a bullish one. You got a nice big move up and then spike right back down today. So another sector I've talked about before, still looking pretty interesting to me, is the IBB. Got that pullback, did the retest regen, just barely got under it. You know, another thing, another subtle thing here in the neoclassical model is that when you get over these bullish retest regenerate zones, and then you come back into them. So in other words, you get over this, right, over the swing point highs, I should have said, and you come back into them. That's the bullish retest regen, and you get under it, right? You close under it. Even though it's just a bar, right, that says that, hey, you know, this is a little weaker than you would have expected. Now, in this case, it did the full retest regen. That's okay. That's what it should have done because it came back within 6 bars. But the fact that it got under it says, hey, you got to pay attention here, right? Because if you come back up and you fail, you're going to come right back down again. So you got to watch this thing. This thing has to push, right? Has to push on up, start making new highs. Otherwise, you're in danger of a larger retrace. Also note, on almost all of these now, you can draw ABCD structures, and those structures point quite a bit higher. And that is in tandem with, and I'll pull this over the weekly, and you can do this on almost any of your weekly charts now. You got ABCD structures that if they break out across this top, back to the upside, and they're fairly large in size. That's it for today. I like the action. Let's see if they can do some more tomorrow. I'll leave it at that. Have a great one. See you next time. Good night.